kind introduction, and thank you, Ms. Dyer, for yet another wonderful training. I'd like to welcome everyone to a talk with the finance doctor, your RX for Forex. This is a call where we have the opportunity to address the fact that we as individuals need to look at two important things. Number one, the fact that we live in a society where the individuals that are responsible for providing us information about personal financial products just happen to be the same individuals that sell those products. So there's some value in us having an opportunity to dialogue and speak about all of the different components of the economic pie, all the personal financial scenarios. Okay, I'm getting a message that I'm having an issue with my microphone, so let me see if I can address that. Okay, please tell me. I apologize, ladies and gentlemen. This is a brand new microphone.
That's better. Stay where you are.
Excellent.
Yeah.
Excellent. Okay, beautiful. Okay, I appreciate that. Please let me know if it happens again. Thank you, Mr. Miller. So what I was saying is that we live in a society where the individuals who make the decisions or provide us with information about personal financial products are those same individuals that sell us the product. So there's quite a bit of value in us having an opportunity to dialogue for 30 minutes, 2 times a week, where we can ask any question we want about trading, about Forex, about crypto, but more importantly, I shouldn't say more importantly, but just as important, how do we manage the economic pie? What's the economic pie? Well, to me, it's any scenario that you have to deal with as a household or an individual. Let me say it again. It's any scenario that you have to deal with as a household or an individual in which you are analyzing, setting up, protecting, positioning money coming into your household, money going out of your household. That's it. Insurance, real estate, your budgeting. I mean, literally from you beginning your financial life and deciding what you're going to budget to you ending your financial life and having an estate plan that has to be managed by your loved ones. Any of those areas in between, this is an outstanding opportunity for us to discuss the different components of it, again, in an objective manner. The second reason why this call, in my opinion, is very, very important is because we have the opportunity to do what I feel is the most important part of successfully trading. Let's go deeper, because this isn't about trading. This is about you providing your family with an opportunity to reach a level of wealth and abundance that may not have happened without this vehicle. This is an opportunity for you to finally have the ability to have financial freedom, to have economic equity. And in order for you to get to that point, there's a certain mindset that you need. So I love an opportunity to have this call because we get to address those two things. What are some personal financial questions that you may have that will allow you to move into what I call economic empowerment? And what are some internal things that you can do and ways in which you can perceive and techniques that you can utilize so that your mindset is in the right position to A, trade, but B, receive this paradigm shifting abundance that you're about to walk into. Last talk with the finance doctor, we had a very interesting conversation called How to Get Out of Your Own Way. And that was asked by a person in the finance doctor before that, because I feel like that was such an important question, wanted to make sure that we address it. So let me start off this conversation by addressing a couple of things. First, there was a question in the chat during the market talks training, in which an individual asked this question: is 1 to 200 the recommended leverage? So on my way to answering that legitimate question, let's just make sure that we're comfortable on leverage. I get this. Some of us are jumping right into this situation. You're aggressively listening to the videos in IM Academy, and you're going back and listening to Ms. Dyer's excellent trainings. And you may even be going back and looking at some specific subjects that are relevant to you in a talk with the finance doctor. So you're doing your due diligence. But oftentimes we have to be real about the fact that you just jump from elementary school into high-level graduate school. The terminology, the situations, it's a lot. Now, is this technique easy? Very. Are we blessed because we have the likes of Ms. Tasha M. Dyer that was able to put together a God-given strategy, which I find to be far easier than all the others? Yes, we are blessed. But we need to be real sometime about the fact that there are a lot of terminologies that are thrown out there that we need to sometimes pause and analyze. So let's do that. Leverage. Leverage is simply a term which means the amount of debt that you will hold. So as a finance professor for the last 26 years, it is a chapter that I teach on how to manage debt. So in the financial world, in the economic world, in the institutional world, they use leverage as a fancy way of saying debt. Can we keep it real? Because this speaks to my next point. In the organizational world that we live in our capitalistic society, companies are really good at finding terms to describe things that make them feel better. Debt has a heavy energy to it. Borrowing has a heavy energy to it. So instead of saying debt and borrowing, they say leverage. And the reason why they call it leverage is because think about what debt allows us to do. Debt allows us to be able to have the power to gain certain things that without debt we wouldn't have the opportunity to do. How many of you have a house with a mortgage? Debt. How many of you have a car with a car loan? Debt. So my point is simply that it's called leverage because it gives you the power to be able to do some things, to control some assets, to be able to drive some cars, to be able to have a larger place to live. So leverage is simply called leverage because in physics, leverage is your ability to be able to move something. That's what debt does. Debt gives you the ability to be able to move. Move in a car, move into a house, move into a situation, move into capital that you need for your business. So bottom line is leverage is nothing but debt. Now, why is this an issue? This is an issue because we need to recognize that if you talk about a $6.6 trillion market, we, each of us as individual traders, represent a very small fraction of that. So when you and I take trades and there's no leverage, then the amount of money that we would make per trade could be extremely small. Now understand this, a pip is 1% of 1%. A pip is 1/100th of 1%. So were it not for leverage, us being able to earn pips could be very small. Think about it. We just got excited about a comment that Ms. Dyer made about, and I hope I'm quoting this correctly, 421 pips. Okay, I get that. That's great. But it's good because we're comparing it to our standard of measurement in this world, and it's a pip. But it's still 1/100th of 1%. So you just got 421 of 1/100th of 1%. That's only 4.21%. But because of leverage, we have the ability to be able to earn more each time we trade. Now, why do we have that ability? We have that ability because just like we have the ability to make more, brokers have the opportunity to earn more. So what happens is every single time we take a trade, there's a certain level of margin. Margin is a fancy way of saying the amount of money that a broker is lending you. There's a certain amount of margin that's provided to us every single time we trade. So when we talk about proper risk management, there are a lot of layers to it, but one of the layers is the fact that every time you trade, you want to make sure that each individual trade only represents 3% of your account. Why is that important? Well, we know that, of course, it's important because if for whatever that trade goes bad, you're only risking a small part of your account. But another deeper behind the scenes reason is that every time you take on a trade, the broker is providing you margin. If you pay attention and you look at your MetaTrader 4, it shows you right on there. It shows the amount you have in your account. It shows the equity value, which is how much you've earned. And then it shows the margin. And it's telling you how much of this account is being provided to you in a loan type scenario by your broker. So I said all that to say this. By using improper risk management, you run the risk of putting yourself in a position where you can get what is called a margin call, where the amount of your trade, the amount of your drawdown, the amount that you have that's being utilized by the account could be so much that even though you didn't hit your stop loss, bloop, you hit a margin call. So I said all that just to give you the background of what leverage is. Now, what we're really doing is we're looking at the balance between leverage and lot size. Now, this is not something I can just snap my finger and make you understand, because this not only is different depending on your broker, but it's different depending on your account size. It's different depending on the currency pairs you trade. There's so many variables which make this not a particular formula, but at least I want you to understand that leverage versus lot size is what puts you in a position to have proper risk management. Now, I said all that to say this. We live in a country, United States of America. I know some of us are from other countries, but this particular country, United States of America, we have a history of having individuals that take on a lot of risk. We have a history of individuals that have taken on risk to the point where it has made companies go out of business. For example, if you're interested, go Google long-term capital management, which was a hedge fund that invested in the Russian ruble and not only made a $40 billion company go down, but it also affected the entire Russian ruble. So I said all that to say this. So American-based brokers have a maximum leverage amount of 50 to 1, meaning that every time you invest $1, the amount of your return is times 50. So most of us have brokers, whether we realize it or not, that are in other countries. And so 1 to 200 simply means that for every dollar that you invest, the particular amount that you can make is times 200. That sounds like a lot, but it really isn't because of what I just broke down. The APIP is simply 1% of 1%. It is 1/100th of 1%. So to answer that question, what is the recommended, or is it the recommended? The answer is absolutely not. Because we don't make recommendations on what you do. We don't make recommendations on what you should do. What we do is educate and make you understand so you can make your own recommendation. That's like saying, is this particular spouse what you guys recommend? There's no way I can make a recommendation for you because the decisions and variables that you choose with your spouse are based on you. So what I've given you is something more valuable than a recommendation. I've given you the insight. I've given you the understanding. And let's go one step further. I am a man who very proudly listens to Oprah Winfrey. And Oprah Winfrey says that humans are the only animals that talk themselves out of their instinct. So don't take our recommendation on what kind of leverage you should have. Take your recommendation. What do you feel comfortable about? What makes you feel good? What makes you feel like, yes, this is what I should do? Let me give you guys an extra credit assignment. I want everybody to Google 2 words, muscle tests. Literally the word muscle, as in these huge ones, muscle test, muscle test. A muscle test is a way for you to ask a question of your body and your spirit will answer the question. And when you do it like that, it gets all of your minds and your thoughts and all that. I didn't mean to say minds, but it gets your mind and your thoughts and all that chatter out of the way. And it asks a question where you can literally understand. I'll give you just a quick preview of it. When you ask a question that has yes energy, you go forward. Doesn't that make sense? Yes, I'm going to do it. When you have no energy, you go backwards. Somebody says something you don't like. No, no. So when you ask a question that and you ask your spirit to answer it, you get yourself out of the way and you simply move. I'm going to do it right now and show you that it's real. But I want you to Google it so you can see it for yourself. My name is Craig. My name is George. Now, I did not make myself do that. All I did was relax. And it's something that takes practice. But to me, it's easier, it's better to ask yourself 1 to 200. Yes, 1 to 100. No. Then you'll be giving yourself the recommendation rather than asking us that. So before I hit the second point, let me pause and ask if the person that asked that question is comfortable with my answer and if there are any follow-up questions. One thing I need to say. I took the first 3 minutes describing what this call is about. But I also think that this call has more value when we walk in the power of the unmuted microphone. Chat questions are fine, but they don't have inflections. They don't have give and take. This is a talk with the finance doctor as opposed to a talk from the finance doctor. So if you have a question, please unmute your mic and ask. Miss Neverson, you are absolutely, I'm assuming that's Miss, you are correct. I'm sorry, you are welcome, my goodness. Okay, now here's the second thing that I'd like to say. One more time, any questions, comments, testimonies about the lot leverage comment that I just made? Okay, excellent. Now, there have been quite a bit of questions. I'm getting that speaker message on my laptop. So someone please put it in the chat or unmute and tell me that you can hear me okay. Just give me a yes if you can hear me okay. Thank you. Okay, so there have been many questions lately about market correction. And I heard Ms. Dyer answer a question about market correction, and I heard Mr. Rogers answer a question about market correction. And let me begin by saying every single one of those answers was correct. They correctly defined what a market correction is, explained it, and they also gave you the way in which we practically apply it in our trading and more specifically in our Be Your Own Bank cash out strategy. But I'd like to give you a little bit of background. I'd like to really make you understand where market correction comes from, because I think it really does kind of speak to again, the deeper behind the scenes, VH1 behind the music part of this situation. So remember earlier I said that institutions like to discuss things in a way or describe things in a way where it makes them sound or feel better. I gave you a perfect example. Instead of calling it debt, instead of calling it borrowing, they call it leverage. Here's another example. Bonds. Bond sounds like a fancy financial investment. I'm participating in the bond market. But all a bond is just a loan. It's a corporation borrowing money from an investor. But instead of saying it's a loan, instead of saying it's borrowing, which makes them have to walk in that heavy energy, they instead say it's a bond. And the reason why it's called a bond is because the company is bonded by law to pay the investor back as long as they're solvent when it's time to either pay the interest payments or pay it back in the 20, 30-year maturity. So I'm just making the argument, or I'm making the case that companies from a financial market perspective, from an economic perspective, from a financial management perspective, like to use fancy terms to describe things in a way that benefit them. So I said all that to say this. I used to work in a city called Lakeland, Florida, which is about 33 miles away from my house. And so what I would do is I would get in my car. I lived in a city, an area called Temple Terrace, Florida, right outside of Tampa, and I would drive to Lakeland. In order for me to drive to Lakeland, I had to get on this street called Hillsborough Avenue, and I would get on the corner of Hillsborough and 78th, make a left turn, and then I would drive to Lakeland. And one of the things I noticed when I first started doing that in the year 2000 is there was a very small little shop right there on the corner, right before you get on 75 on Hillsborough Avenue, and it was called Seminole Smoke Shop. Seminole Smoke Shop. So Seminole Smoke Shop was simply a smoke shop that was run by the Seminole Native Americans. And I noticed that they started putting up signs. They started tearing down buildings around the smoke shop. And it happened so fast, I said to myself, wow, these and whoever's doing this building, they're moving so fast, they must have a lot of money. So I went home and I Googled, now that's a lie, there was no Google in 2000. You see how you caught me in a lie? I did a internet research on who the Seminole Native American tribe was and what they were doing. And I saw that they had access to multi-millions of dollars, and they were about to build a casino. So every day I'm driving to Lakeland and I'm driving back, and every day it just got bigger and bigger and bigger and bigger and bigger. And in a year's time, they had this huge building. Another year after that, they put this huge parking lot there. It's a huge structure. And sometime I would have to go to Lakeland on Sundays for flag football games, or sometime I would be working late. And no matter what time it was, or sometime I go to the club. And whenever I would come back, I noticed that the parking lot was always full. I don't care if it was 2 o'clock in the morning, 5 a.m., I'm going to a flight, no matter what was going on, that parking lot was always full. So I said, there's something going on here. So I don't gamble, I'm a nerd. But one day I went into the casino. And I noticed that in every single part of the casino, there were all of these signs with these incentives for you to be inside the casino. We're giving a $1,000 giveaway, must be present. We're giving out free steak, must be present. So like literally every little room in the casino that was built so fast and had such a 24-hour presence, it said have to be present. So I figured that what was going on is this casino recognized this marketing truth. If we get people participating, if we get people in the building, then we know we increase our profit margin. Why are you talking about a casino, finance doctor? Because that reminds me of the brokerage function of the financial markets. I'm not talking about your broker. I'm talking about brokering, period. I'm talking about all financial markets. Forex, stocks, bonds, commodities. It reminds me of the way they operate because they recognize that you must be present for them to win. So the stock market, which is the most sexiest market, it's the market that started it all. I know we do Forex. Yes, we can do it on stocks, but we recognize that Forex is a much more efficient model for us to trade. But we have to recognize the fact that the stock market is what makes this world go. So when I talk about the stock market, I'm really talking about all financial markets. They recognize that in order for them to win, you must be present. So what's the rule? I'm asking this rhetorically. What's the rule for investing in stocks? It's buy low, sell high. I already know. We're way beyond that. We're doing something way more efficient. But let's at least analyze the way this works. Because when we do our US 30 trades, they're based on how the stock market is doing. So we need to understand this. So the rule for investing is buy low, sell high. Buy low, sell high. Now, when I used to do aggressive financial planning seminars, everybody wanted to talk about stocks, so I had to address it. And one of the analogies I would use is if institutions invest more than we do, and the rule is buy low, sell high, doesn't that mean they're operating under the same rule? Don't they have to buy low and sell high? So if they have to buy low and sell high, doesn't that mean that when they buy low and then they sell high, who are they going to sell it to? If these institutions have all this information and they buy low and sell high, when it's time to sell high, who do they sell to? I'll tell you exactly who they sell to. That's when they pick up the phone. Hey, I got a great stock pick for you. I already know. We're past this, but we're going backwards and having this conversation so you can understand. I promise I'm going to bring it back home to Forex. So, hey, got this great stock pick. I used to use this analogy. If someone had a girl had a boy they really liked, or a boy had a girl they really liked, they're not going to introduce them to their friend. They're going to take them for themselves. So if the institutions that invest in stocks have a good stock, why would they call us and tell us it's good? So the buy low, sell high was just a game for them to be able to get rid of the stocks that they were done with. Sloppy seconds. Said all that to say this. So since the financial market always wants us to participate, they invented this term. Let me back up. They always wanted us to think the market was going up. That's all they talk about. The market's going up. The market's going up. Hey, must be present to win. Market's going up. Buy low, sell high. If you buy low, I have an opportunity for you to sell high. Hey, come participate. Got a stock tip. Buy low. Market's going up. But when the market's going down, you're not making money. You're not participating. Now, we know now because we're being our own bank, we can make money no matter what it's doing. But in the original way and infrastructure in which the stock market was presented, they only wanted you to participate if it was a bull market. So if it was a bear market, in order to keep you in the building, guess what they would call it? A correction. Hey, the market's going up. It's going down. Oh, it's just correcting itself. It'll just go right back. So the history, the origin as to why it's called correction is because the financial markets, casino, wanted you to always be in the building. They always wanted you to participate. So instead of calling it a downturn, they called it a correction. Now, does that have relevance for us? Not really. Because we recognize it's just about the trend. If it's going up and then it goes down for a while, correction. If the overall trend is going down and then it begins to go up, correction. So like I said before, the analysis and the definitions and the answers that have been provided to you by Ms. Dyer and Mr. Rogers are outstandingly accurate. I'm just giving you a little bit of the behind the scenes so we can understand this process even better and recognize how blessed we are. That we have an opportunity to be the casino. Because all casinos do is want you to play. Whether you win or whether you lose, they still win. Well, that's what we're doing now because we're our own bank. And because we're our own bank, we're taking advantage of the opportunity. When the market goes up, we're getting paid. When the market goes down, we're getting paid. So my objective here was very simple. Just to give you a little background on why. If you know what you're doing, you will always have a job. If you know why you're doing it, you will always be the boss. Let me say it again because I stuttered. If you know what you're doing, you will always have a job. If you know why you're doing it, you will always be the boss. So the reason why it's called a market correction is because the casino just wanted us to be in the building. Questions, comments, testimonies before we close this call. Well, thank you everyone very much for participating in tonight's Talk with the Finance Doctor. So I'm going to make the assumption that neither Ms. Dyer nor unmuted mic.
Yeah, Dr. Bythewood, yes. There's absolutely no way I could not interject here with such an amazing analogy and how you just made something that would seem to be so complex, so simple and easy to digest. Once again, ladies and gentlemen, this is just another added value of what you have the opportunity to take advantage of. I mean, if you're not, inviting your friends and neighbors and relatives to hear this information just on the fact of they need to know this information, because in most instances, these were not conversations that were held in our households. And I'm just grateful and honored to call you business partner, friend, with the liberty and the freedom that you just share this information with passion. So if you are excited about what Dr. Bythewood shared this evening with you personally, if this has enhanced your understanding of anything, I need you to drop an 888 in the chat. I mean, this is just phenomenal. This is phenomenal. Here's what I need you to do. Here's what I need you to do. Here's what I need you to do. I'm going to be in agreement. Yes, we love chopping. We love dropping the numbers in the chat. But if anything resonated with you, just to enhance and, I'm a preacher of the gospel, and, we tend to preach a lot better when the people are pulling on us and they're excited about it. So I need you to unmute your mic and just just celebrate Dr. Bythewood. I mean, show him some love. If this it reached you on the inward.
Thank you.
Thank you.
Thank you.
Thank
Amazing.
you.
Thank you. We appreciate that very much. Thank you.
What resonated with me is that
Thank you.
what resonated with me was that analogy about the stocks. That was a good point. While we were when we were buying low, who was you? That was just a good point that you made. Never thought of it like that.
Dr. Greg, my name is Lionel Hunt. It really blessed me. I'm excited, and I'm always enjoying your talk with the doctor. And I just want to say thank you. I'm excited. God bless.
Dr. Bythewood, Bishop Simmons, thank you so much. So very well put, very plain, very fruitful. Thank you.
Everyone is very welcome. Thank you for those beautiful sentiments.
And ladies and gentlemen, I just had to appreciate Dr. Bythewood, and as he said, we operate off of energy, and to hear the sentiments is just amazing.
I got to work on this PowerPoint presentation. Me and my cousin were doing it together, and I'm supposed to be correcting my part, but we couldn't find. I got a new computer about a month ago, remember, and I can't find my Microsoft disk. So now I'm teed because I can't find the disk with the code on it. So now I got to go in here and pay for it.
Coming together.
No, even the new ones still have a, yeah, they still have a, no, because you have to.
So with that being said, ladies and gentlemen, we're going to close this call out tonight. Hey, 5 a.m. in the morning, 5 a.m. in the morning. You've got some amazing information from the trade whisperer self, Confluence, and, you know, Dr. Bythewood just took the lid off of everything we've been doing. So ladies and gentlemen, once again, I salute you, your family. You've been called to lead the masses that you absorb in this information. So I don't want you to take this moment lightly. So as you're thinking, as you're resting tonight, I want you to think about those 5 families. Those 5 families. And for the next 21 days, I want you to identify 5 different families every single day that you're not asking them to do anything. You're just simply exposing them to this information. And with the multiplicity of opportunities they have to engage in hearing our trade whisperers speak and the finance doctor, make it a point, make it your mission, make it your purpose to allow them the opportunity to gain tremendous value and experience and hear what you've been able to hear. And if you're committed to that with me, let's just go all out and let's make sure that we, for the next 21 days, we pay it forward. We just have a spirit of gratefulness and gratitude, and freely as we've received this information, freely we want to give it. Hey, ladies and gentlemen, my friend, neighbor, and relative, listen, I'm involved in something that's changing my life, and on the strength and the love that I have for you, and based on our relationship, hey, my business partners are going to be sharing some information that you have to at least avail yourself to. I'm not asking you to make a decision. And even if you don't understand the information, you have to be in this environment. If you're committed to doing that for the next 21 days, every time you're going to bring someone new with you. You're going to bring a neighbor, a friend, a guest. And guess what? For some reason, the God of the universe has put everybody on pause. So if you've been trying to get in contact with people previously, guess what? God is showing us favor that we now have the opportunity to get as many people in front of this information as possible, because things are going to be uniquely different once this virus tends to dissipate. So guess what? You have something viable. You have good news that now you can share, and with boldness and confidence, without any fear of contradiction or anything other than, guess what? This is some valuable information, and the individuals that you're connected to, their heart is in the right place, and they're going to provide quality information. Guess what? Just like some of these tools do the heavy lifting for you, allow this collective consciousness to do the heavy lifting for you. So if you're excited about the opportunities and you're with me for the next 21 days, I don't care who you are, where you are around the world, around the globe, you're going to make it your point to at least, for the next 21 days, 5 new people. Not only are you going to share it with them, you're going to ensure that they come to these calls so that they can be a participant and be in a position where they find themselves dropping 777s in the chat. If that's you and you appreciate the information that was shared tonight, I need you to drop a 777 in the chat as we close out this call. If that's you, hey, let's do it. Let's change the world. We love you. 1 million families, March the 28th, 2021, financially educated, impacted, act like a bank, think like a bank, be your own bank. So with that being said, God bless, and we'll see you at the next appointed time. Be prosperous. May the Lord protect you and your household. A hedge of protection, no harm, hurt, and danger come. And I plead the blood of Jesus over every person that's listening. And we love you. God bless. And this will officially conclude this call.